Welcome to the deep dive. Today we're diving into some really fascinating insights you brought us. We're unpacking this high-stakes, kind of quiet battle for controlling everyday payments in South Africa.
Yeah, it's been brewing for a while.
For decades, right? Traditional giants, like Absa, they've pretty much dominated our financial lives. But here's where it gets really interesting and why we wanted to explore this. A new contender, and a surprising one, has popped up from, well, the supermarket checkout line.
Of all places.
Exactly. So our mission for this deep dive is clear. Who's actually winning the race for everyday payments in 2025 South Africa? Is it the banking powerhouse or this retail disruptor, Shoprite's Money Market?
And it's crucial, I think, to see this contest as more than just who processes the transaction. It's fundamentally about controlling access.
Access for who?
For millions, really.
Right.
The unbanked, the underbanked,
Yeah.
giving them away into the formal economy. And like you said, it's about that data trail. Incredibly valuable data comes with every single tap or swipe or cash withdrawal.
Okay, let's unpack the shifting battlefield then. Aisles versus apps. While the traditional banks were doing their thing, something else was definitely brewing. So take us back to 2020. What exactly did Shoprite launch with this money market account?
Well, back in 2020, Shoprite, the biggest grocer there, started relatively simply. It was an app and USSD wallet. Basic stuff.
Right.
But the real game changer, the big move, came in 2024. They upgraded it. It became a full transactional bank account.
Wow. Okay,
Yeah.
so not just a wallet anymore.
Exactly. And this wasn't just like a minor product tweak. It was a massive statement. First time a South African retailer offered something that comprehensive. It really challenged the whole idea of what a bank even is.
Yeah.
Showing financial services could just be embedded right where you shop.
No branches needed.
No branches needed.
And their core pitch is, well, it's pretty bold, isn't it? South Africa's lowest cost bank account. What about those fees? Tell us about that.
Oh, absolutely. It's incredibly simple. A flat R5 fee for cash withdrawals.
Just our thoughts.
R5.
Yeah.
And then every other transaction, free. No monthly fees either.
That's disruptive.
It's a category reset, especially for people at the base of the pyramid who count every rand. And importantly, it's built on a solid foundation. It runs on Grindrod Bank's license.
Ah, okay, so the regulatory side is covered.
Right. That gives it the trust layer. Jean-Olivier, he's the Shoprite GM for financial services. He put it perfectly. He said, customers wanted a straightforward account with full control, no surprises, no hidden fees.
Straightforward. Control. Low cost.
Exactly. It taps into this need for simplicity and control, which for millions is way more valuable than complex features or, the prestige of a traditional bank.
So Shoprite's turning its tills into mini branches, basically. How did Absa, the big established player, how did they react? What was their counter move?
Well, while Shoprite was busy building this lean, low-cost model, Absa doubled down on what they call everyday banking.
Okay.
Their strategy is all about leveraging modern digital rails. Convenience through tech. They're rolling out scan-to-pay QR codes everywhere.
Seeing those pop up more.
Integrating with Apple Pay, Google Wallet, Fitbit, Garmin. Extending their reach beyond just the physical card into people's digital lives. And crucially, embedding PayShap transfers the real-time ones right into the Absa app.
So keeping things modern, convenient within their ecosystem.
Precisely. Meeting customers where they spend, but through their trusted, secure bank infrastructure.
It's that classic bank strength, isn't it? Secure, widely accepted, modern tech. And I remember Ari Rautenbach, who was the Absa Group CEO then, stressing their resilience. He said something like, despite a challenging climate, Absa remains resilient. The underlying franchise is strong and growing.
Yeah, projecting strength.
But it sounds like, despite these really different approaches, Absa and Shoprite are actually chasing the same fundamental opportunity. What is that?
Exactly right. They're both aiming for a piece of South Africa's, well, still surprisingly cash-heavy economy.
Still very cash-based.
Very much so. Even with digital payments growing, cash is dominant for many people. The South African Reserve Bank's own payment study confirmed that. That huge flow of cash, that's the real prize both are after.
So why might aisles win out over traditional branches in this fight? What's the unique edge Shoprite gets from its stores that a bank just can't copy?
It really comes down to following foot traffic. It's brilliant, actually.
Yeah.
Shoprite stores are where customers already are, every week, sometimes every day.
Right, buying groceries.
Exactly. So customer acquisition, servicing them as barely cash users, it becomes incredibly cheap, and it builds habit. You're there anyway, you might as well do your banking.
Makes sense.
And Money Market is positioned perfectly for that cash economy. That R5 cash out, everything else free, cash services right at the till. Plus you can use the app, USSD, even WhatsApp. It fits into daily life seamlessly.
And you mentioned the no debit orders thing. That sounds like a limitation, but they frame it as a benefit.
They do. For gig workers or people receiving grants who might have irregular income, not having automatic deductions gives them complete control over their money. It's a feature, not a bug, for that segment.
That R5 cash out is incredibly compelling. But is there a catch? I mean, how does Shoprite actually make money with such low fees? Is it sustainable?
That's the million rand question, isn't it?
Ugh.
Look, the profitability likely isn't coming from that R5 fee alone. It's probably about the volume of transactions.
Scale.
Scale, exactly. And the incredibly rich data they gather, plus the chance to cross-sell other things within their massive retail ecosystem. They're playing the long game, focusing on customer lifetime value, not just squeezing fees out of each transaction.
And they seem proud of it.
Oh, yeah. Their newsroom back in 2022 called it a full-fledged transactional bank account, the lowest cost entry-level bank account on the market. And the growth backs it up. Nearly 2 million customers by 2022. They even won awards, like the MTN Business App of the Year.
And they put the prize money back into Money Market, didn't they?
They did, reinvesting right back into the platform.
And that checkout line, it seems it doesn't just stop at South Africa's borders. Shoprite Send, their remittance service, over 70 countries.
Yeah, and regulated by the SARB. What's really impressive is how they handled those 2024 rule changes for Lesotho and Eswatini transfers. They kept those running directly from the in-store counters. That shows serious operational muscle.
Keeping those corridors open is crucial for many customers.
Absolutely. And while Shoprite is mastering that physical reach, Absa isn't sleeping on the digital side. They integrated PayShap, remember, the SARB's instant payment scheme.
Right, future-proofing.
Exactly, making sure real-time payments are smooth within their app, pushing QR codes hard, and launching Absa Pay.
Absa Pay, what's that exactly?
Think of it like an open banking style checkout. It potentially lets customers pay online directly from their Absa app, maybe even bypassing traditional card networks. Lower costs for merchants, better data for Absa potentially, owning that digital point of sale.
So Absa's flexing its digital muscles, but given how much cash is still used, is there a risk they're focusing too much on digital? Could they miss out on that huge cash segment Shoprite's grabbing?
It's a definite tension, a balancing act for Absa. They need to serve both worlds, but, they're betting on the long-term shift to digital, even if it's slow. And look at TimeBank.
Ah, yes, the Pick and Pay and Boxer partnership.
Right. They hit over 10 million customers by 2024-2025. It powerfully shows that embedding banking into retail spaces works. It bridges that cash-digital divide effectively. Retail floor space is a proven distribution channel now.
Okay, this brings us to the referees, the regulators. You've got the Financial Sector Conduct Authority, the FSCA, and the South African Reserve Bank, SRB. How are they shaping this whole competition?
They're playing a really critical role. The FSCA, since around 2023-2024, has been actively developing frameworks for open finance and embedded finance.
Which basically means
Basically allowing financial services to be built into non-financial platforms, like Shoprite's app or Tills, and enabling secure data sharing between providers, with customer consent, of course. It clearly signals they see a role for non-banks, as long as the consumer protection safeguards are there.
and ARBs.
The SARB's been busy modernizing the whole payment system with its Vision 2025. They launched PayShap for those instant low-value payments. And then in March 2025, they floated these activity-based directives.
Activity-based directives.
Yeah, it sounds technical, but it essentially creates clearer rules for non-banks to perform specific payment tasks, like processing payments or issuing e-money without needing a full banking license and all the heavy regulation that comes with it.
Okay, so for you listening, what this really means is the regulators are acknowledging that, yes, the supermarket checkout line is a valid place to start your financial journey. Their main focus is making sure it's safe consumer protection, KYC, anti-money laundering rules, system reliability, and knowing who to complain to if things go wrong.
Exactly. And it's always worth remembering that Grindrod Bank provides the actual banking services behind Money Market. That partnership is key for compliance and trust.
Right.
And linking this to the bigger picture, the South African economy in 2025. It makes total sense why these low-cost, easy-access options are booming.
Because of the economy.
Yeah, unemployment is still painfully high. Around 32.9% in Q1 2025 officially. The expanded rate, including discouraged workers, is closer to 43%.
Wow.
So people are incredibly price sensitive. They hate fees. Money market hits that sweet spot perfectly. Now, inflation has eased a bit, down to around 3% mid-2025, which helps disposable income slightly, but wallets are still very thin for most.
And load shedding. Has the recent relief helped?
Definitely. The break from severe load shedding since May 2025 is good news for everyone. It means more reliable uptime for digital payments via apps, and importantly, the in-store money market counters can operate during normal retail hours without disruption.
Any shadows on the horizon?
Well, there's always geopolitical uncertainty. Things like potential U.S. tariff shocks could impact growth and jobs, which just reinforces the need for these affordable, cash-friendly financial tools.
Okay, let's get into the actual chess match. The playbooks. Starting with Absa. How are they using their size and digital know-how to defend their turf?
Absa's strategy is clear. Own the digital rails. They're pushing QR codes hard, promoting tokenized wallets.
Tokenized wallets that's turning your card details into a secure digital token on your phone.
Exactly. More secure, often faster, because your actual card number isn't shared. Plus, they're leveraging traditional card rails, integrating PayShap deeply, and pushing their own Absa Pay at checkout.
And internally.
Internally, it's about that everyday banking focus, streamlining products, making leadership changes to really defend their mass market position. And partnerships are key, like renewing their big Visa alliance across Africa. That boosts card issuing, acceptance, innovation.
They sound confident.
They do. A 2024 statement said something like, "We're seeing the benefits of our strategic choices." A growing customer franchise. So doubling down on digital dominance and partnerships.
Okay. Now, Shoprite's playbook. It feels like a completely different game plan.
It really is. Totally different philosophy. Their core strategy, turn foot traffic into financial traffic.
Simple but powerful.
Very. Cash in, cash out at every single till. Linking the money market wallet directly to their extra savings loyalty program, driving behavior, and making it accessible everywhere. App, USE, WhatsApp, ubiquity.
And the price.
Price is their weapon. That R5 cash out, everything else free, no monthly fees. In a country where cash is still so important, that's, oh, you called it devastatingly compelling earlier. It really is.
A moat built on price.
Pretty much.
Yeah.
And then add the cross-border piece. Shoprite sent over 70 countries. Keeping those Lesotho and Eswatini transfers going through the rule changes shows serious commitment and operational skill. It builds incredible stickiness.
It's fascinating how different these approaches are to winning over and keeping customers. And you mentioned TimeBank earlier. There's success in Pick and Pay and Boxer, getting over 10 million customers. It really underlines how effective that retail space can be.
Absolutely. It's solid proof that the model works, and it has definitely shaken up the competitive landscape. Banks have had to take notice.
So this brings up a really important question for 2025. What does owning the customer actually mean anymore when things are so fragmented?
That's a great question.
I think maybe we can look at it through three lenses: habit, data, and ubiquity.
Okay, let's break that down.
Right, so habit. If you can get cash, pay your bills, buy electricity, send money home, all while you're doing your weekly grocery shop. Shoprite wins on sheer frequency and convenience, doesn't it? Your bank effectively becomes the supermarket aisle.
That makes sense. And then data. This is where it gets really interesting. Absa sees the transaction data on their Rails card swipes, PayShap transfers, QR scans.
Standard banking data.
Right. But Shoprite, they get something unique. They get basket-level SKU data. What specific items you bought combined with the payment data.
Wow. So they know you bought bread, milk, and paid your electricity bill.
Exactly. It creates this incredibly powerful retail media meets finance goldmine. They feed this into their Shoprite X digital hub for analysis. It gives them a view of spending habits banks can only dream of.
That's a huge advantage. And the third lens, ubiquity.
Yeah, so Absa's rails, their digital payments, they're pretty much everywhere online and accepted at most formal merchants. Wide coverage.
Right.
But Shoprite's rails, their presence, is physically everywhere. People shop for essentials, especially in cash-dominant communities where maybe a bank branch isn't nearby. It's deep reach versus broad reach in a way.
It's like Absa is building the highways, and Shoprite is building all the local roads and corner stores right where people live.
That's a fantastic analogy.
Right.
And if you step back, the big picture is digital's growing, but cash isn't disappearing overnight. It's still costly for the economy to handle all that physical cash.
So meeting people where they are is key.
Absolutely critical, physically and financially. Peter Engelbrecht, the Shoprite CEO, said it simply. If a retailer is gaining customers more visits, bigger baskets, you're doing something right.
And Money Market fits right into that.
Perfectly. Its genius is meeting customers exactly where they already are, while Absa's genius lies in weaving all these new digital rails, PayShap, QR, tokenization into a smooth, trusted bank app experience. Two different kinds of genius, really.
So wrapping this up, what are the key takeaways from this deep dive? What should someone navigating finance and tech really take away from this battle?
Okay, I think we can boil it down to 5 key takeaways. First, embedded finance is fundamentally about distribution. If you have customer traffic, you can build financial traffic. Simple as that, assuming regulators permit it and the economics stack up. And we see the FSCA and SR carefully opening that door.
Okay, number 1, distribution.
Second, price architecture really matters. Shoprite's R5 cash out, zero other fees model. That's a fundamental reset for entry-level banking. Expect banks to react maybe with similar low-fee accounts or perhaps merchant-funded rewards.
Price matters. Got it.
Third, it's rails versus reach. Banks control the core payment infrastructure, the rails. But retailers, especially grocers, control immense physical customer reach. The winning formula long-term. Probably partnerships that combine bank-level security with retail convenience.
Rails versus reach. Number 4.
Fourth, cross-border services create stickiness. For many customers, being able to easily send money home, remittances, anchors their usage. Shoprite's ability to keep those corridors open, even through rule changes, is a massive strength.
Stickiness through remittances. And finally,
Number 5, macro volatility favors low-friction money. In an environment with high unemployment and squeezed budgets, things like simplicity, affordability, and just being physically close by often trump fancy features. Low-friction wins.
that was a really fascinating deep dive. It's amazing how these daily transactions are quietly reshaping the whole financial landscape.
Yeah, it's clear the center of gravity for financial interaction is moving. It's shifting towards where people actually spend their time and, well, their money, the everyday places.
So who really owns everyday payments in South Africa in 2025?
Yeah.
I guess the answer is nobody owns it outright. Not yet, anyway. But it's clear the winner won't be decided just in a bank's head office or during a coding sprint.
No, it'll be decided where South Africans are already lining up.
Maybe, surprisingly, right there in aisle 5. So something for you to think about. As you go about your own financial life, how much does that convenience at the till actually matter to you compared to, say, a traditional bank branch or app? What really stands out to you from this deep dive we've just had?
You've been listening to Empire and Legacy, African Business Chronicles. Our hosts are Zuri Mwangi and Kwame Adeyemi. Subscribe to the podcast on Spotify, Apple, or your favorite podcast platform, and share this episode with fellow business leaders. Empire and Legacy is essential listening for business professionals and leaders. Be sure to subscribe to be the first to know when new episodes are released. Until next time.